Okay, so recording in progress. So this is, I think this is week 3 of the masterclass. So yeah, we kind of got some decent PA to actually look at, like I said, in terms of like more counter trend stuff, which, yeah, like I said, most of the time, I would say more often than not, we are in pullback periods. As you can see, obviously it takes a lot less time to go pro trend than it does to go counter trend. And yeah, ultimately what that means for us as session traders or people who are aspiring to be a session trader is you kind of got to be able to understand these counter trend moves. And it's really, really simple. We're going to be dealing with this piece of price action, but ultimately, you know, this low took out this high, which means that somewhere in this leg right here, you know, in that 50% area should have been where we were looking for potential buy opportunities. Once we saw that we couldn't break here, you know, ultimately we took out equal lows, came down, swept in. Again, hindsight stuff, but just kind of looking at it now so that we can make it make sense. So ultimately, once we started pushing in, we broke through, or we broke into, you know, essentially this supply level. I was looking for sells in here because I thought we took liquidity here and then kind of marched our way through. Now I'm just going to get over to our piece of price action and just kind of get that back testing tool on. I believe, yeah, it was right around here. So 7, we'll call it 7 a.m. Okay, so, and at some point this weekend, whether it be tomorrow's or Sunday's, I want to go over Friday's price action, but I got to go back and try to back test this thing, hopefully later on today, and just try to understand what the hell was going on. Just a really sharp move in both directions, and just want to see if there's anything that's even worth talking about, or if it was just a day that should have been just sitting on the hands for the better part of the session. So in terms of price action right now, again, we're 7 o'clock in the morning, just pre-New York, kind of when we're jumping on the charts. Anybody, well, you should be able to see that, you know, supply is kind of in control of the market, I would say from this area right here. Now we're going to obviously look to the 5 minutes, see if there's any kind of refinements, but ultimately this is the move right before the momentum that broke structure. So, you know, we could argue that the wick is here, but ultimately the area in which that like we're kind of toying around in right now is right here. And the only reason that this is like a decent area is because you can kind of see these relatively equal highs right here. And we kind of like pushed into this. Now, it's not to say that we can't expect a new low to get printed from here. I think if you were to map this out from here, let's just see what this is. So kind of this leg down into here, like we're well into the premium of the leg, right? So that was another reason why on Monday or Tuesday, whatever this was, when I saw this take of these equal highs right here, this is why I was looking at potentially taking sells off of this portion here and looking at this as a change in character. But yeah, I mean, the market had other plans, right? You know, if there's more liquidity to take on the top side, it's the easiest way to go pro trend is by taking out all of the buy side liquidity first, right? So it's just essentially what happened. We got to, you know, take the chance on these trades or lose that opportunity. So yeah, this, I mean, let's basically, we're reacting to this level right here. We can see that we're, you know, wick on the 15. And then I would argue that, you know, if we were to kind of start mapping out demand levels, it's important to understand where you would be exposed to liquidity. So right now, you know, the first thing I was kind of looking at was, you know, obviously this decisional area right here. And the reason I looked at this is because, you know, on a lower time frame, you'll be able to see this a little bit better. But these are those little details that are really going to help you kind of select these more valuable order blocks or demand and supply zones. So if you look right here, we've kind of, you know, swept this bottom right here. You can see these relatively equal lows all the way across. We've pushed down and then essentially we've like moved up into this area, right? Now, the more extreme area of this move obviously rests in here, right? This is kind of like, you know, structure right here into here. But ultimately, if we come down into here, we have to remember what we're kind of exposed to in terms of higher time frame liquidity on the 15, right? So if you just look across like this, you know, we have a lot of built up liquidity underneath these lows. And then furthermore, you know, if we tap into sort of like this area down in here, you have to remember again that now we're exposed to, equal lows resting like this. So the only real area that we could have looked for longs from that would have really been feasible would have been in this area, based on the fact that this area right here had taken liquidity on the equal lows resting here and then broke us into new structure. So some people want to know, maybe, why don't you consider looking at this area, right? And it's not that you don't. It's just a matter of, you have to select a POI. You got to select something to build your narrative around. And ideally, the areas that I really like to, obviously build a narrative around are going to be the ones that take this liquidity, right? So for me, this just makes more sense at this point to obviously look at this level. First and foremost, we're looking to potentially take sells into here, provided we get criteria. But ultimately, the trend right now in terms of the 15-minute is making a high, making a new higher low, and then eventually coming up and making a high, right? And I'm sure if we take the premium and discount function of this, or the premium discount tool, you can see that we've tapped in, and that would be really easy to kind of select where we should be coming back to, right? So don't forget to use this tool. I know there's not a whole lot of mention of it in the trading plan. I guess it's just kind of one of these things that's automatic, and I kind of wrote this thing for the previous masterclass, if I'm being completely honest. And some of the things I've just, not that I've forgotten, it's just, it's things that I don't even think to do. I just automatically want to make sure that there's, we're taking buys in the necessary areas and sells in the necessary areas, right? So if you were to look, like I said, we've already established that we're in the premium of the higher time frame leg, to be able to potentially look for some sells. Now, with that said, ultimately what we're looking to do here is, okay, well, if we want to take sells down into here, that's fine. We could also leave a small piece of the pie to potentially come down into lower areas. But when you start to understand how liquidity works and how it needs to get built in order to kind of fulfill these higher time frame moves, ultimately, there's a process of mitigation that needs to happen. So the more we tap into these zones, create new highs, ultimately we have equal lows now, we'll have equal lows, we'll have equal lows. It becomes a lot easier for the market to kind of move in this direction, provided we take out what's resting above these highs, right? So, the functioning price of any instrument is always going to be the product of available liquidity. And what that means is, if we have any kind of buyers sitting above here, it's a lot easier. And I know I keep saying this, but it's just foundational to understanding smart money, is essentially because there's resting liquidity above equal highs, even if we put in a low, chances are we'll clear the highs before then coming down into taking out these lows. So just an important thing, or an important component to being able to create a narrative that really can be powerful. So we can establish that, obviously, this is the one that took liquidity. That's the reason we're maybe looking for sells into here, if you get criteria, of course. And if there is no criteria, then it's really simple. We just wait till this kind of gets fulfilled, and from there we start looking for that expectational order flow to take out those equal highs on the 15. Any questions so far? Cool. Awesome. Okay, so we'll go down to the 5 and just kind of see if there's any, fine tuning that we could do. There's not a whole lot in here. Ultimately, like if you look at that 15, this is that move right before that volume kicked in. Yes, we could argue that the wick might get tapped into, but ultimately, if we show criteria within the space that we're in right now, it's as simple as just kind of getting into a move, right? Because you can't just sit here all day and expect things to happen without making moves first. If there's enough liquidity built for us to be able to take a move, then ultimately the bottom line is we need to be able to get into something, right? It's our job as traders, especially during especially during times where we're only trading for a couple hours per day. So 5 minute, let's see if there's any refinements. So yeah, you can kind of see, we could maybe take this wick right here if we really wanted to, but you can see it a lot clearer here where we have this sort of sweep of liquidity down into you know, this little area right here. I don't know that you would call that demand. It's kind of like a, you know, pause in the market, whatever you want to call it. But the bottom line is that we took out liquidity on the equal lows and then immediately shot up. And you can see this very minor break of structure right here. Let me just kind of map that out really quick. And this is one of those things that, you know, devil in the details. You can just barely see it, but it is there. Whether or not you would take that is, you know, also a different conversation, but it is in fact a break of structure. So, okay, let's start moving into this. So once we start looking at this right now, you can kind of see that there are there's some built up liquidity resting right here. And again, we're just jumping on the charts around 7 o'clock. So right around this time, you know, not looking for any kind of longs this deep in the leg, especially while we're in a higher time frame supply zone. So you'll see that in the trading plan. You know, we don't take demand trades while in supply zones. This is what's meant by that, right? We're in a supply zone right now, higher time frame. We're not looking for longs in this region. Better to kind of wait until we come into the 50% or more of the leg before at least looking for something of a little bit higher risk reward. So right now, ultimately, once this level kind of breaks, if and when it does, this is when I can start considering really getting into some decent sells. However, there's no reason you couldn't be looking for sells once this level right here broke, and, you know, obviously jumping in like this and then just throwing yourself over at break even to be able to obviously, you know, see what ends up happening here. Anything that's counter trend, pulling back to an area where the expectation is to make a new high. Typically, I'm not trying to partial too much. What I am looking to do is jump into trades that are going to almost guarantee me a decent reaction. Most of my counter trend stuff, I'm taking limit orders on so that I can make sure that as soon as I tap in, I'm getting a run away from it. So that way, at least I can just, you know, break even on it. I'm not going to chase around counter trend within counter trend trades. It's just a matter of, you know, obviously waiting for this higher probability setup to kind of show itself. But in the meantime, we're looking to kind of catch something down into those regions. So let's just play price. And right now, the demand level that really needs to break for us coming on the charts at this specific time would be this level right here. And then we can start looking at the origin of the move somewhere up in this region up here. But the problem with looking at something like this is, again, because we have these built up mitigations right here, there is going to be some built up liquidity on the top side. So we just need to be a little bit wary of this kind of thing. So one of the setups that I would potentially look for in something like this is if we broke and say we came up and we did print equal highs and then kind of pushed away, I would be looking at something pulling back like this and then maybe taking something like this so that I'm not exposed to these equal highs up here. But it doesn't always deliver that way. So we just kind of got to adapt to the market conditions. And I'm going to ask you guys throughout what you guys kind of think throughout this session. So right now, again, just not really looking for anything until we break. Okay, so we start breaking down like this. Now we've got something that looks like this, right? So equal highs, now it's really dicey. So usually what ends up happening across equal highs, even if we do get a break of structures, we're going to get that final purge of liquidity. Again, you'll have to go back and back test this. Don't take my word for it. I've seen it enough times that, you know, I know to just kind of sit on my hands. It's difficult to do. But ultimately, you know, if we have equal highs resting above here, this is the only area we're really looking to kind of take trades from, is once we maybe sweep the top of this. Okay, a lot of people look at this as supply. Sure, it is. There's no ifs, ands, or buts. You know, maybe it's possibly even demand, a small bit of demand, depending on what time frame you're looking at, turning into a small range-bound supply. Not a high probability area to be taking trades from, especially with equal highs resting above. So if you are looking to take something like this, I would just be very, very cautious. You know, these are not high probability areas. Ideally, like I said, with equal highs resting above, typically we would like to see those get ran. or us come in like this and produce a new area to potentially trade from here. But again, now you're exposed to more liquidity. And how often or how much do we really want to chase around this counter trend move into the POI that we're looking to follow expectational order flow from, right? So again, this is just thought process, and it's going to take some patience. It's going to take some time. You're not gonna win every battle with yourself either. Ultimately, sometimes we just want to get into a trade. We feel like we have to get into a trade, and it's normal to feel like that. But ultimately, patience is what's going to pay you the best kind of dividends here. Okay, so we start coming in. So now we've got. I guess we could argue that there's like a piece of 1 minute demand here. Yeah, I'm marking that. Definitely not looking to trade from it, but I'll tell you something right now. Yeah. Inducement, you mean? Yeah, so there's equal highs we've pushed in. That's kind of what this whole narrative is based off of, right? Is we're pushing in and now we're breaking bits of structure to the downside. So what we'll do, little piece that broke. Yeah, exactly. Little piece that before we broke here, I see. Yeah, so cautious of this. Now, again, in higher time frame supply, 1 minute demand, the way that I typically view this, and again, up for interpretation, is ultimately, I think the higher time frame is going to prevail. But one of the rules within that trading plan is, again, now if we tap into demand, we can't be looking at this area for supply, right? So that's kind of what this whole thing is. So really, we kind of got like this range bound demand level right here. So just be cautious of it. And again, keeping in mind that we are expecting to probably see a wipe of these equal highs before getting into something of half decent quality on the sell side. So again, depends on how you want to look at it. But I'll tell you something right now. It's not worth chasing. We're counter trend on the higher time on the 15 minute to begin with, and now we're counter trend within counter trend. So it's just like how much do you want to chase these freaking things around, right? Forward. Okay, so let's go like this. Play through. Okay, tap in. Okay, and we start to move away. Ultimately, if depending on how hungry you really are, but technically this is a demand zone. We've had a, chalk and a flip, right? So this is in all fairness, there's no reason you could not take this and target equal highs, I guess. But ultimately, it just really boils down to this, like how high of a quality of a trade do you want, or how low of a quality of a trade do you want to take, right? Especially if you go off of and again, I'm going to throw this in that trading plan cheat sheet. We're not in the discount of the leg. So again, it's just a low quality on low quality on low quality. So it doesn't mean it won't work out. It just means that, it's just, why? At what point do you, kind of draw the limits? So let's play price. We're looking to, okay, so there we go. We print in another equal high, actually, if I'm not mistaken, very close to. So, I mean, we can kind of see what's going to happen here, right? So more than likely, these are going to get taken. We might break through supply. And if you go over to the 15, you could see that, we do have this sort of wick that sits above here. I understand over time, it won't work. Yeah, over time, it's just not worth it, right? And again, it's if you want to just grab a quick 1 to 5, and you have that discipline to just take out the equal highs or whatever it is, by all means. I used to trade like this quite a bit, to be honest, and I just like the idea of just sitting back now and just kind of letting the market show itself, and just these higher risk reward, higher probability setups, right? We spend a lot of time doing analysis, and it's just a lot of times it's just not really worth the trouble to get into these. So and we didn't really have liquidity built up going into it. And what I mean by that is we didn't have like this built up mitigation and all this kind of stuff. So, we had these little equal highs that got cleared out, but because of all of the, I guess, stop losses and buy stops sitting above here, the market has some ulterior motive to jump up into these regions. So let's just keep pushing price. We get the reaction, triple top at this point on the 1 minute. A lot of retail traders looking at this and they're just drooling, right? And where's the stop losses? Well, the stop loss is going to be nice and tight above this, and we'll see what ends up. Yeah, so there you go. You get the sweep. Okay, so once we get the sweep, then we got to start looking at, okay, well, what levels need to break here, right? So for me, first and foremost, I mean, yeah, we got to see this break, right? So if that breaks, then we can start looking. But ideally, if we start tapping into, like let's say this demand zone right here, there poses some issues with this as well, right? I mean, technically we've got a bunch of liquidity built up. It's probably not going to hold, but if for whatever reason this demand zone starts to hold, we just got to start to be a little bit more cautious as to, okay, well, what point are we going to again keep chasing this counter trend move, right? Within a counter trend move. So we've taken liquidity. We could easily just rocket right through this thing, but if and when we start breaking through this, then we can start to probably look for some sort of a sell opportunity, because now we've taken all of the buy side liquidity. Okay, so we tap in. Okay, reaction, breakdown. I mean, at this point, we're like, let's see a little bit more. Okay, so now we've broken down. So good question. And again, no right or wrong answer, but where would you put your order right now? Or would you put an order? Yeah, that's kind of like what I'm thinking too. And here's kind of where the interpretation of the market gets, obviously everybody's got their own way of viewing it. One of the ways I would view this is obviously this inside bar, right? I'd like to see this guy. The other thing I would look at is, okay, well, what move took liquidity, right? Which one of these, because you got to remember in that trading plan, what's the most reliable place to take orders from, and it's the ones that essentially take liquidity. So if you look technically in this case, what I would probably do is look at this entire up move before the down move, because this is the move that pushed us in, right, and kind of took out buy side liquidity. So with that being said, obviously, like, I mean, I could put the I'm just looking at the size of this order block, and obviously it's just not going to work, right? It's just, I mean, yeah, 2.4 pip stop. Yeah, you probably get away with it. But ultimately, bump this in something like this, and now we can get ourselves a decent risk reward, 1.5, maybe 1.6 pip stop. And again, our target is down into this 5-minute refined POY. Now, we don't need to get too carried away and bring this all the way into the bottom or anything like that. Just keep it nice and simple. Target this, like there's going to be liquidity underneath these lows, right? Sitting here like this. So it's a decent area. Now we could go in a lot deeper. We could go halfway in, probably bring this up to like a 15-hour, 14-hour trade. But there's no need to be greedy. It's just a matter of, take some profits off the table. And I would probably, in this case, yeah, just move over to break even. Now, would I take partials? So this is a good question. With something like this, again, this is kind of building the narrative. And this is another thing too, like when you don't take partials, there's no guarantee that you'll get paid. So you need to have a good narrative to be able to not take partials and just go full TP. So if you look at this, liquidity, built up mitigations, liquidity. Something like this, I'd probably have, actually, I took this trade. So I can tell you right now that I took a full take profit. Actually, that's a lie. I took 25% off when we broke this low, and the rest ran to full TP. But ultimately, again, hindsight is 2020. But ultimately, if I had to do this over again, the narrative was built that the liquidity was there. The POY was intended to get met anyways. So especially if you get in at something like this right at the top, understood that we took liquidity on the top side, we got that sponsor candle or very clear order block, if you will. There's just a lot going for us in terms of how this trade should pan out. Now, if we go like this and come back in, great, and away we go. I'd be moving over to break even almost immediately, because as we do this, there's going to be more and more liquidity built up. Now, on the flip side, if we kind of come down like this, and then kind of come back up, boom, we tap in, we should immediately kind of drop off, because if we start clearing all this liquidity, we should see a very sharp move to the downside. Again, this is even if we kind of come up to this region. If we end up just kind of going like this and like this, I'm not going to be chasing this trade on the way down. I only want to take this from up here. And furthermore, if we come back down into this level, then we're ultimately going to be looking for this higher probability move, putting in that that higher low to then put in the higher high, which we'll deal with if and when that time comes. So order on here, we get tapped in. So, you know, a lot of these decisional guys will get tapped in here, and that's cool. That's fine. But you got to know when to kind of take your profits, and you got to remember, if you know we've tapped into here, what does that create? Now it creates that liquidity, right? And more often than not, we usually want to go mitigate the one that actually took liquidity in the first place, in my experience at least. So like I said, don't take my word for it, back test it, and try to understand what it is that I'm talking about here. So boom, we've broken through. So there's no, you know, the second this candle taps into here, if we would have seen some sort of pullback like this, our order probably would have got removed, because there is a chance, it's not a high chance, but there is a chance that we come into here and we sweep another time before then coming down, because the intention is to put in this new higher low within the discount of the leg, right? So somewhere within here, and we haven't done that yet. It's just not a sustainable way for the market to move, again, in my experience. So at this point, I still have no issues keeping this on. Do we really worry about stuff like this? I mean, if you want to, you can, but with the loads of liquidity that are resting below here, I'm not too strapped for thinking that this is going to hold. You know, this didn't really take any liquidity. This actually just created more. So for me, this is a very high probability move in terms of counter trend within counter trend, right? So at this point, again, just kind of keeping my order on. We've tapped into this demand level. I'm not too stressed about it. What does this become right here? We got relatively equal highs. You know, there's a chance that we can see a reaction from it. But ultimately, like, it's just not a level that's sustainable to trade from. Again, in my opinion, the more reliable one is always going to be the one that sort of takes this liquidity up and around this region. Okay, so we'll see if we so we tap into equal highs. I don't know if we pull back. Boom. So we get the tap in, and then we start moving. Okay, so at this point right here, almost immediately after we get this candle, this candle right here, I'm break even. It's game over. It's counter trend within counter trend. I got no business screwing around trying to prove anything by holding, and then all of a sudden this comes up like this, creates an equal high, and then all of a sudden we get swept out and I get no opportunity to go to break even. This is a trade that I'm taking to get to this trade. So just be mindful of this, right? This is not you know, taking this trade as my number one for the day. This is the trade I'm taking to bring us down into the level I actually want to trade from. So if I get taken out for break even and this thing ends up fucking off and then going all the way down here, don't matter. Yes, it's a decent area to trade from, but the fact of the matter is, yeah, exactly. So let's just move this back down into here. And like I said, like, this is like a 1 to 10 on a counter trend within a counter trend. So now at this point, you know, there might be another opportunity here. So I'm at break even at this point, start to push. Okay, we create a little bit of liquidity right here. Chances are we can tap into this and maybe move away. So, you know, if you missed out on the first one, I mean, the trade idea still stays the same. And I would look at maybe something like this in the inside bar. Again, you know, like, let's look at this right here. Okay, this candle right here. And I just want to talk about this because it's important to understand why this candle is of any importance. So I can get rid of this. We've sort of had that break of structure, very clear. But what did this candle do across right here? It took liquidity, right? So this is the only area that you should be even considering to kind of trade from. Ultimately, you know, you could trade from this on the mitigation, but you would still have to cover the high of this candle. And the reason you would have to cover the high of this one is because this is the candle that took out these equal highs right here on the 1 minute. So you just have to be really careful, because a lot of people just don't understand, myself included sometimes, that, okay, well, if this is the one that took liquidity, well, and then we've already mitigated it partially with this, well, why don't I just take this one and just cover this high? And then a lot of times we come into the 50% of the candle and mitigate it, right? So you just have to be careful about where you want to chase trades around and how tight you want to keep your stop loss, and also the risk reward. Because if we now look at, okay, like, let's say we want to grab this guy, you know, it's got a decent wick on it. So maybe we're just going to take the body closure kind of thing where the wick starts, something like this. Let's see how this goes. And then we just kind of cover just the top right here, 1.2 pip stop, whatever it is. Let's just see how this ends up playing out. If it does, so we get tapped in. So you can see that we start moving away, right? And we go a little bit deeper into the block. And this is no surprise because we haven't really tapped into that order block. Again, neither here nor there. But ultimately, the bottom line is you got to put yourself in high probability setups, right? So for me, I would be looking at probably only taking maybe this inside bar. And again, it didn't get tapped in, but that's, again, I'm just trying to show you that, if you miss this first one, these are getting lower quality and lower quality every time that they get tapped in. And they also create a lot more liquidity by doing something like this, right? So the higher probability stuff is always going to be taking the extremes that take liquidity in the first place. Okay. So at this point, like I said, break even, sitting on this trade. And if we get taken out, we get taken out. Okay. So, lots of people looking to trade this right here on the bottom. And it's like, why? The only way that you could potentially trade this area right here would be if we took out this high. If we took out this high, this would be not necessarily a strong low, but it would have a better chance than the low right now, because this low is not going to really do much. And the reason we can say that is because why would it? It didn't take out structure. There's no reason for it to hold from a structural standpoint. Okay. So we start moving. Okay. Yeah, quick question here. Go ahead, Hugo, if you want to cue your mic, man.
Yeah, quick question. Because I'm on the same boat. Do you only kind of consider this pretty strong because it swept the liquidity? Because if it didn't, then it would be something where like it didn't really take out demand, right?
That's well, yeah, exactly. But we took it out here, right? And here.
Yeah. I mean,
because ideally, like, you remember the process of like mitigation as well, right? If we make a new high, the idea is that we're going to keep doing stuff like that and moving up to the next POI. But the idea behind this entire trade setup is that we've already broken structure. Now we just may wick above this, clearing out the last of the liquidity. And the reason we do that is exactly a higher time frame, right? So this is that higher time frame POI. So we're not really looking if you're looking for demands this high in price, it's just not going to be a good time, right?
Mm-hmm.
That's all I'm saying is like we're looking for sells. No matter what, we're looking for opportunities, because the higher probability setup is to take a counter trend sell than it is to take a buy at these regions.
Yeah, no, I got you.
Cool.
Thanks. Yeah.
Again, guys, Hugo, great question, man. I love that you're coming to the table doing this, because I'm sure a lot of people have the same questions. But ultimately, you got to measure out, where's this is all premium of the leg, right? This is all discount of the leg. We only look for sells up here and we only look for buys down here. Otherwise, your emotions are just going to get, fuck, man, I've done it. I've done it so many fucking times. And this is the only reason I can teach about it now. I feel like it's a healing mechanism at this point. But ultimately, you just got to remember, like, the higher probability setups are going to show themselves in the premium for the sells and the discount for the buys. So, okay, so let's just keep moving through price here, and we'll see what happens. Okay, so we're taking out. Okay, so I mean, that's a 1 to, like, if you would have partialed at this low right here, which is, I think, as soon as this low broke, or somewhere in around here, 1 to 5, yeah, I took a 25% just to kind of at least bank something, and then I took the rest off hard take profit. And yet this is quick, JR or Junior. And the reason it's so quick is because look at this, right? Like, we had, so this entire move, this counter trend within counter trend, was fueled off the idea that, well, we have enough liquidity to support this move. Otherwise, you don't take the move, right? If there's nothing there, this was, I mean, this is the ones we want to focus on. Yes. Ultimately, so the narrative, again, when you go back and watch these, it's not me showing you how to get into the trade. It's showing you how to build the story to understand why the trade works. That's what this is. It's not about showing you what I can do in a back testing session. It's about showing you the thought process behind how to build the story to make it make sense. Look at this, right? As soon as we broke through this low, look at all the liquidity here, look at the built up mitigations, look at the equal lows. It's to no surprise. There's no surprise here. We should, in theory, this should be a no-brainer, right? And that's kind of what we're training. Like, this is very repetitive. In all fairness, you can watch one episode over and over and over and over again and really understand how it is that I look at the markets day in, day out. But it's about building that story, right? And making sure that it makes sense for us. So again, liquidity built here, liquidity built here, liquidity at the equal lows here. This is the sweep. So guess what? If we get the sweep of liquidity on this block right here, this is going to be the most reliable one to trade from. So let's look at this, okay? Okay, so right now we've taken this. I'm just going to kind of peel this guy over here. We know that that one went through. So what level needs to break for us to look at a long? Yeah, for me, that's it. It don't matter. That's cool. We're going to take this no matter what happens. If this breaks, I'm putting a limit. Okay. We've tapped in, we're good to go. Okay. So we've broken above. So where do we put the order here? Anybody? Depends on the stop loss. Sure, exactly. Exactly. That's the real sauce here. What does it say in the trading plan? What's the biggest stop loss we can have? Typically 2 pip, right? 2.5 Zen, yes, exactly. 2.5 on the change of character. So this is probably going to be our chalk. So if we have an opportunity to put ourselves with a 2.5 pip stop, ideally, let's play around with this, right? Now, another thing we can do is kind of jump down onto the seconds chart and see where these areas are, if you, of course, have that option. So if I look somewhere in here, you can see it. Let's go to the 30-second. Yeah, something like that. I like that. I don't mind it, at least. I'm just going down to the 30, but yeah, 15-second, you can kind of see this little demand zone. So a couple of people were asking about, you know, like, where's the sauce in the 15-second and jumping, is it worth getting the second starts? Well, it's stuff like this that's really kind of gonna, you know, separate you from everybody else. So we could call this demand. This supply has now failed. Here we go. We got our demand level here. So we could ultimately, does everybody understand why you can actually put this on here like this now? So if we do something like this and, you know, we cover something like this, I mean, this is dicey, right? This is dicey. It's 2.4. We're not even covering the low that took liquidity. We could easily visit that extreme. So for something like this, if you go back out to the 1 minute now, you could say, okay, well, like, let's look at this. Like, we're trying to make, if we're going to get into this trade and we're going to potentially expose ourselves to a loss, I'm looking at, okay, well, where can I put this where I know that I'm not going to be too worried about? Exactly. I might look at something like this. I might look at maybe the 50% of this wick. And then that way I can keep a little bit of a deeper stop, just in case we go a little bit deeper, whatever it might be, right? Because this is it, you know, like I would look at, okay, let's just look at this wick, right? Okay, so bring this down like this, and then maybe give myself 2.5 like that, you know? So you just have to remember that, like, you don't want to be taking unnecessary L's either. So let's keep it like this, just for argument's sake, okay? Whether or not it gets tapped in, like, you know, is up for debate. Now we got to find a target, right? So ultimately, we got to be looking over here and saying, okay, well, where's the next area that we were going to target in terms of, there you go, it's done, right? That's it, that's all. We're going to target the very beginning of this inside bar. What do you notice about this inside bar right here? You notice anything interesting? Yeah. Almost every time, man. Almost every single time. It's going to be taking liquidity. It's textbook, man. It's the same shit every time. This is why they're so reliable, these areas. Like, same thing with this. You know, we could have taken this entire candle right here. You know, why? Because it took liquidity, right? But we refined, because that's what your job is as a trader, is to refine to create a better edge. And that's what we did. Okay, so looking to take this long. into here, 1 to 13. Nice trade. Nice available trade. Change of character, maybe taking a 0.25% risk on your first trade of the day, maybe 0.5%, whatever the hell it is, totally up to you. Find a system that works for you. Okay, so where's the next place where supply is? Hold on, let me put something in here first. Yeah, exactly. So supply, we'll call this supply like this little area, right? This little range bound supply. Now I'm gonna just kind of peel this guy over here. I'm trying to clean up these charts a little bit for you guys, make it a little bit cleaner for when you rewatch, if and when you do, of course. So let's see what happens here. Okay, come back down. We don't tap in. Okay, we tap into supply and we start reacting. Okay, so at this point, can you keep your limit order on right now? Yeah, it's as simple as this, right? You want to put yourself in a position where, you got to understand, what are we, like, the ulterior motive here. And again, this is going to come with time. This is going to come with experience, right? We tap into supply, we pull down, we failed to take out the low. What does that create here? Liquidity, right? So the more liquidity we have to fuel this move, the more likely it is to actually do what we're hoping it's going to do, right? So when you see this start moving away, don't be scared that it's going to, like, this is your only chance to get in. And if it is, and for whatever reason it ends up going without you, well, then so what? Don't chase it. Wait for the next move, right? Or if you missed it, learn from it. Learn from what you could have done to get yourself in the position. So at this point, we'll just say that this limit is off right now. Okay, so we failed to take out the low. Now we tap further in. Okay, and we start moving back. Okay, so at this point, we've now, let me just see what happens here. So now we've taken out little bits of, obviously second structure and stuff like that. But as we start to move like this, is this the 50-second shock entry? In here, there might be one. I'm going to look in a few minutes once we get down, but I'm not looking for a supply right now. We're not looking for any kind of supply trade. All we're doing right now, again, is because we've TP'd already, we're not looking for any more supply trades. What we're looking for is this liquidity to kind of build up and kind of come into our area to be able to take some sort of a position. So because we're reacting to supply right now, this order comes off, okay? And the reason it comes off is because there's no guarantee that we won't run this low again because we're reacting to supply. So what does that do though for us in terms of like ulterior motive for why this is happening is building liquidity to be able to fuel this move that we're hoping to get in on. So what we're going to do right now is we're just going to map out the fact that, demand, we'll call this like a demand wick down here. If we see some sort of, let's say a move into this like this, and we see that tap and flip, then we can take in a confirmation entry like this, right? This is what it says directly in that trading plan. If we leave from a supply zone like this and we come into a demand zone, we need to see that flip to be able to take this move pro trend. We all good? Yes or no? Cool. It's going to be tough, and things should start piecing together probably this week and getting into next week. You should start to see some pretty drastic improvements in just not so much how you view the market, but how you build your story, and not being scared to see moves go without you. Because if they go without you, who cares? It's not a big deal. I had so many moves today go without me, and it's fine. It's just trading your rules, right, and making sure that you can move into break evens relatively quickly. So let's play price and see where we end up. So we tap into here, get a reaction. So what are we doing? We mitigate this. That gives us more liquidity. Push down into the low, we clear that liquidity. We've now tapped into demand. So when we tap into this demand zone right now, if we see a change in character, then we can start to look for potential setup. Okay, so look what we did. We've now ran the low. Why did we run the low? Well, we failed to take out the high, but we built the liquidity we need. So as soon as this happens and we run the low, this is the only time where I'm saying, okay, I want to jump onto the seconds chart. And the reason I want to jump on the seconds is because you're going to want to see these little details to be able to see when the best time to get in. is, right? We've built equal highs, we've built mitigations, we've come deeper, we've ran the low. That means that all of the sell side liquidity that was sitting here from people trading it has now been taken. So what's the only thing that's going to be left? You have to remember, on this low over here, we've already taken liquidity. So we're not expecting equal lows to be a problem because this is the first tap into it. So now this is where, and again, when you rewatch this, this is the times where I really like the seconds chart to really get myself into high risk reward trades relatively quickly. Boom, we get the instant reaction. So as soon as we get this reaction, we could potentially start looking at possible limits in this area for me. And the reason I would say this is because this is not a chalk, and this is more of like a demand turning into, just a push through, showing that there's momentum, showing that we've basically taken the liquidity here. And once we've taken this liquidity, what's left in the market, right? It should only be all the buy side liquidity that's left. So let's go like this. We've induced the bottom, right? And I would have no problem putting an order on, something like this right here, this last down move before the up move. Whether or not, I don't know if this gets tapped in, but there'll probably be other setups if it doesn't, because we still need to come up and mitigate some stuff. So let's go like this, just see how this looks. And yeah, nice little 2-pip stop. Okay, obviously we know where our target is. We'll bring it up there in a second. Okay, so we don't get tapped in right off the bat. So that's fine. There's no, I would keep my limit on here for now. Now I'm just going to jump out to the 1 minute and just have a look at what's going on. So I would probably keep my limit on in and around this region. Now, we can kind of see now we've got this inside bar that's kind of formed instead, but I still like this area based off of the 15-minute or the 15-second, because this is partially mitigated, this is partially mitigated. The only part that really took liquidity is going to be on the wick. So I'm just going to keep my order as is for now until we have to adapt to the market. Okay, so we keep pushing away. It's all good. So now we've kind of got supply that sits right in here, right? So if we tap into supply, we're just going to get rid of our order. It's as simple as that. We just don't have a guarantee that we won't put in a new low. So ideally, if you would have, let's say we would have got tagged into this for whatever reason, and then we start running, as soon as we tap into supply, there's two options. You take 25% off the table, keep your stop loss open, or you take 25% and move to break even, or you take nothing off and you just move to break even. And if you tap in, all of a sudden now you're kind of screwed, right? Because if it starts running away on you and now you don't have basically an entry criteria again, you're going to watch this whole thing kind of do its thing without you again. So cool. So if we tap into supply, we remove the order. Now we've kind of tapped into this little guy right here. You can see this little, this is actually the refined area. If you look at this before we broke structure, right? Structure was right here. So this is that little refined area. So I would call this enough to say, you know what, if we're tapping into this, I'm just going to say, I don't really want my order on here. I don't want to expose myself to unnecessary risk. There's going to be another setup, right? So we tap in. Okay, so now we go through. So this is known as what I like to call that, obviously, like a supply to demand flip that we could potentially, exactly. So this is in your trading plan. Most of you guys, well, you should know, but by now, can you take a trade on this now instead? Yeah, exactly. Like this is the ideal area to be able to kind of take the trades from as these start to move like this. So personally, no issues taking this kind of trade. So ultimately what I think I would do is map this guy out right here, this little inside bar. Okay. And this would be your demand. Okay, so supply got failed from here, created this demand. Let's just see what this looks like for, let's see if this breaks a little bit further first. Yeah, so you probably would have taken, sorry, my bad. I probably would have tried to take maybe the entry of this candle and then give myself like that 2-pip stop. Again, totally up to you whether or not you want to take this. There's probably other opportunities anyways, but let's just see how this would have played out. Okay, so we tap in. Okay, we move away. So you could have easily moved yourself over to break it. Like, let's say for whatever reason you didn't take this first one. Let's look to see if there's now going to be a potential other opportunity here. Okay, so now we created equal highs. We've given us reason to basically go higher. We're creating more liquidity. We are pro trend. We've already induced the bottom. We're not really worried about this level anymore. So now if you didn't take that first one, now you can say, okay, well, maybe this would be the one that I would take, right? And if you look, does this take liquidity? No, it's pretty well equal lows, right? So you would just have to be mindful of this. And the way that you'd be mindful of it is probably take maybe the 50% of the block and just kind of give yourself a little bit of leeway on the underside in case we decide to sweep into this guy down here. That's how I would view this. And again, this is just kind of getting into something that's pro trend. We want to make sure that we're there. We have the liquidity built on the buy side sitting here like this, and like this. We don't want this to move without us. So even if you wanted to keep it 2, even at 2.5 pip, just to be able to get into something, even if the risk reward isn't as high, you don't want this to leave without you, especially because we're in at the very bottom, basically. So let's just see what happens. Okay, tap in. Okay, so at this point right here, it's real simple. Move yourself over to break even. You know, don't sit here and fucking wait. Yeah, we have a little piece of demand here, but the more times we tap into this demand like this, you know, the more exposed we're going to be to potentially becoming liquidity, right? So we should have more liquidity built on the top side than we do on the bottom. And that's the whole reason why price is going to move this way. But again, it's just about making sure that you're not exposed. So at this point, break even. If we come back down and visit the extreme, what I would expect now is we couldn't take the high. So we may end up sweeping one more time. And then we'll look for something like this, right? So it's just about understanding where the risks sort of sit in the market right now, right? So, you know, the risk, I mean, we've got equal highs here. We've got equal highs here. Should be no issues to break those. So let me just get our target. Okay, 1 to 14. So, you know, partials at the week high, probably take half of it off at the week high, right? As soon as we sort of like break through this level, or just before it, even if you want to, you know, take half your position off, let the rest run. However you want to manage, right? The management is something that is very personalized to each individual trader. I don't want to tell you to do one thing and not the other. Management is how you want to do it. If you have reason to believe because of the equal highs, there's enough liquidity to bring us up into here, that's cool. That's fine. There should be more than enough. Yep. Hello? Oh, I thought somebody came on the mic. My bad. Yeah, so we're in this guy. Like I said, I would consider taking partials off at here. But that's really it. I mean, and again, this entire move was unnecessary. You know, we didn't even need to take trades from here to come down into here. I just want to show you that this is how you use that trading plan that's there, because we haven't really had a complex pullback that's been decent enough to kind of show how this works. Yeah, go ahead, Zen.
Hi.
Yes.
So I'd like to ask is, let me annotate that. Okay.
You're worried about the equal lows, I know it.
Yeah. So this point.
I know you, Zen. Okay, so here's the thing: like your equal lows in stuff like this, you're not gonna break through this. You know what I mean? It's not a matter of breaking through. We might wick below, but it's not going to be substantial. Because, and again, this is built off the narrative that we have all of this built up, equal highs, built up mitigations. The idea behind this is that we are going this direction. You never know if it's going to be taken or not exactly, JR. But ultimately, it's just a matter of, okay, if we know that there's a demand zone sitting in here, then what do? You could just cover something like this, right? Just make sure that you're covering the wick of this one. Have a 3 pip stop if you really wanted to. So I'm just showing all the different available ways to jump in. Yes, are you exposed to potentially becoming liquidity? If you have too tight of a stop loss, for sure, right? If your stop loss is just sitting under here, you know, you're basically asking for it at this point. If you keep a stop loss like 2.5 pip, you know, we got enough wiggle room to just kind of, you know, tap through here and then end up going, right? So it's like, do you want to be able to get into this trade, or do you want to sit on the sidelines and watch this entire thing happen, right? And again, the only reason I'm considering doing it at this point is because we have built liquidity here, we have built liquidity here, we have built liquidity here, we have built liquidity here. You know, we've just taken all the sell side right here. So the idea is when we take liquidity like this, chances are we're moving upwards.
Right. So what about this one when we take liquidity here, and this also is a inducement, right? Similar to the
Yep.
buy ones.
Yep.
But we did not take the entry from here.
Well, this, yeah, I got you. But we didn't go demand to supply, right? You know what I mean? Like this one, if you look at this, this was supply turning into demand, right? Whereas this was not demand turning into supply.
Oh, I see. So we need like a reaction.
Well, you want to, again, and these are just different types of entries based off of what's available, right? So, you know, this is more reliable because supply failed to put in a new low, which means that wherever this reaction point, let me just zoom in here. Wherever this reaction point puts us into, okay, we've tapped into supply. We've basically put in this low right here. We should not breach this, because this is the idea that we've put in the low and we've pushed forward. This is the new structure low.
Right. Okay, thanks.
Cool. Thanks, man. Good question. I knew you were going to ask. I was waiting. I was looking at the chat. I was like, Zen's going to bust my balls shortly. I'm sure of it. It's all good, man. I hope you understand. If there's any questions after, you know how to reach me. We'll chat some more. Okay, so 2 pip stop was enough for me. Okay, let's keep playing price and see if there's any other entries that we could potentially kind of get into here. So let's just see here. Yeah, the only real place that there's supply is up here, but at that point we have so much liquidity built, we're not really stressed about it. So let's see how we start to move. Okay, so again, break even on this trade. We're just letting that float break even. And once we kind of hit, and again, what I like to do is I'll snap a line across where I want to take profit. Okay, so something like this, as soon as this gets tapped into, I'll usually set an alert. And if I'm on NT4, I just close whatever it is. You know, have this predetermined, say I'm going to close a quarter, or I'm going to close half, or I'm going to close 3/4 of the position and let the rest run. Whatever it is, you need to have a game plan, right? And this should already be, once you're entered, like you had 1, 2, 3, 4, 5, 6, 7, 8 minutes to figure out what you're going to do next, right? And your next move is always about how are you going to protect your capital and how are you going to take profit off the table. You know, letting yourself go all the way up to this POI, that's fine. But now you got to manage underneath lows, right? So now what you got to remember is we got to be able to put in, you know, some sort of a high, and then we got to put in some sort of a low, and then you got to manage underneath this, right? So you got to watch 1 minute breaks of structure and stuff like that too. So anyways, it's always better to just partial out and then leave yourself either open or at break even on your stop loss. Okay, let's see what happens here. Okay. So again, we're not looking for mitigations right now. What I ideally would like to see is either we break above the high and pull back, or we tap into here, pull back, and then see some sort of change in character to be able to then build more liquidity to facilitate this larger move, right? So again, you just kind of, you got to have ideas of what scenarios should play out or could play out to get us into these kind of trades, right? So let's just see what happens here. Keep playing price. Okay, we start to pull back. Okay. Pull back. Okay, so here we go. So we've kind of like, we should have partials off the table right at this level, you know, across these like little equal highs, whatever it is. And at this point, again, now we're still got, we gotta measure out where this premium and discount of the leg is, right? So we want to be able to say that, okay, like the only way that I can really get into something decent would be kind of in this lower zone. I guess now we can kind of maybe map into this. Let's not get too carried away with this, but ultimately the biggest thing that we need to remember is like we need to see something substantial, like built up liquidity to be able to at least get ourselves into a potential decent move. So ideally, what I would like to see is tap into here, come down, tap into here, sweep, creating the liquidity and the liquidity to be able to jump into something. So we'll just see what happens here, whether or not there's a scale in or even first opportunity if you miss the other ones. Okay, so we come up, tap in. Okay, not looking to trade from this low. Didn't take anything out. Okay, so what are we doing right now, right? Creating that liquidity. So it's good for us if you know how to read it. So right there, right when we sweep underneath like this is when I'm starting to look for finer details, right? We kind of got this very, very small sweep of liquidity. Let's see what ends up happening. Okay, ideally what would need to break here is going to be here. Okay, ideally what needs to break here is going to be here. So I would map something like this out, just kind of going like this. Okay, once we, oops, shit, my bad. Let me, my bad, guys. Let me just go like this. Let's go back to here. Oops, hit the wrong button the one freaking time. Okay, so something like this. So once we break, sort of, okay, so once we do this right here, so we've essentially taken out liquidity one last time, very similar to what we've done right here. What I'm doing now is probably jumping, and again, if you have the second chart, great. If you don't, it's not entirely necessary. But ultimately, what you need to realize now is that like this is the level that needs to break, right? So on the seconds time frame, this is where it becomes really valuable, right? So as soon as we see this break, we can start to look for some sort of entry criteria. So now that we've broken, okay, we've broken this level and we've broken this level. So where could you put an order right now? Yeah, well, just, yeah, something like this, right? So this is where that seconds chart really kind of shines through. So I would do something probably like this and just look and see what my risk reward would be like starting up here. So that's like a 3 pip. That's not really what I want. So I'd probably bump this into like a 2 pip stop, covering the low. And then again, kind of going up to this same region right here. So this could either be a scale in or this could be your primary entry. Okay. Sweep down, tap in, start to push. What are we doing? We've got the reason I can take this trade. Why can I take this trade right now? Without hesitation, it's because of this, right? We've now cleared out all of this liquidity. Okay, we've broken a small bit, we've swept it back down, and here we are. So now what you could do is if you missed all of these trades, like let's go to the 1 minute. Now you can see that, yeah, there's demand sitting right here too, right? So if demand sits in the market right at this level, could you put an order? So let's look and see what it looks like on the 1 in case there's people that don't have the seconds chart. So now you can see a lot clearer. Where could you put your order right now? Yeah, what do we do with wicks that are more than 50% of the candle? Bingo. So if you've missed all of those moves, here's your Hail Mary pass. And again, there's no guarantee that you can get tapped into this, but it's just putting your orders on where they make sense, right? And this is where it makes sense to put your order based off of what price is doing. And then look, there's no equal lows either. Okay, so there we go. Push in, tapped, liquidity built. Okay, so let me just move this over like this. You guys can see it. Okay, so 1, 2, 3, 4 different opportunities to get in so far. Okay. And this is basic market structure, right? This is basic. Like if we go to the 15 right now, don't forget where we're at. And you got to put yourself in a position to always be looking at what's going on the 15. Remember what I said, set a timer, do whatever you need to do. This low created this high, pulled back, made this low, made this high. The low that's strong is guaranteed going to be here because there's equal lows and this one took liquidity. This is where we're trading from. Doesn't get any simpler than that, right? But the only way you're going to be able to see all this stuff is if you zoom out. My eyes, having done this for the last 7 years, understand where the structures are. I understand. And one of the things I used to do too is I actually used to take this highlighter tool and I used to go, okay, high, low for 15. There, this is the level that needs to break. I put my little mark. Like do what you need to do in order to set yourself up to understand where these these valuable levels are. So let's go like this. We'll see if we're not expecting any more trades to get tapped into. Why? Well, look at all the liquidity built, right? We have everything built to be able to come up into this region up here. So now it's a matter of management. So very simply put, if you're not at break even at this point, you're going to be a fool. You might as well you're better off taking a break-even trade and getting on the other side of it than sitting here exposing yourself to more risk than is necessary. So at this point like this, again, 50 I'm taking 50% of my profits probably off at this level. So let's see what that looks like at this level, above these weak highs. Well, see, now you probably don't necessarily need to. You probably go just above it. And the reason I say that is because we've tapped into it so many times, these highs are going to become very, very weak, right? So I can remove this. Again, you don't even need to partial if you don't want to, but it's just good to take something off of the table for yourself. So we'll keep playing. Okay, we get the reaction to the high. Boom. It's to no surprise that this is just going to fly through. How many times? 1, 2, 3, 4, 5, 6, 7 taps into it. That's just fuel for us, man. Yeah, that's it. I mean, let this thing kind of push through. Okay, so we don't quite tap into the POI. So now, ultimately the level that needs to break for us is going to be here, right? So if this is the level that would need to break, where are you going to manage? You should be managing underneath here, right? Because if this comes all the way down to here, that means that more than likely we're going to crash all the way through on this liquidity that's built up, right? Which is, again, what the higher time frame, if you now you zoom out to the 15, what is the higher time frame really trying to do here? Here's the high, here's the low. Where are we trying to go? We're probably trying to go to here or here, right? To be able to put in a new one of these. So when you see all this stuff happening, it just build together the narrative with the time frames that make sense, right? So management underneath here, this is that pause in the market. On the flip side, let's look at this. Okay, for whatever reason, let's say we missed all of these trades. Okay, and you want to throw that final Hail Mary pass. There's a demand zone here, right? Now this is a good one, and the reason it's a good one is because this is, to a certain degree, supply, because it took out 1 minute structure. So what is this known as? Yeah, it's a flip zone. So if that's a flip zone, could we look for trades? Well, if the risk reward from here to here is enough, why not, right? And the criteria shows itself. So let's just look and see if there's anything. I don't know that there will be, but let's see. Building liquidity, tap in, come down, tap in, build liquidity across the high, equal highs. Okay, pull up. Where's the level that needs to break? So if we break above that, can we put a trade on? Okay. Okay, well, guess what? Where we want to put a trade? Something like that, probably 50%, right? Because it's a pretty big candle. See, I'll just go like this. And let's put our risk reward tool on, do it right at the top. Yeah, it's too big. So all we do is bring this down into here. Okay, 2.2, something like that. Probably more than enough. I probably even squeeze 2 pip if you really wanted to. Yeah, we'll do that. And we'll just see if the risk reward's there. 1 to 7.5. If you miss the whole thing, there it is, right? So we've broken. Okay, we got equal highs. So more than likely, you got to remember what's going to happen here too, right? So equal highs are going to pull us up, but chances are we're going to build a little bit more before kind of going up. So there might be even more opportunity. I'm just going to try to show everything that's available, right? Okay, tapped in. Building liquidity. Okay, we've broken above the high. So something like this, I mean, I could probably go pretty close to break even. Or what you could do is, well, you're not going to partial this soon. But, you know, let's say 1 to 4 or 1 to 5, you can take 25% off the table because we're getting pretty close up here, right? We want to take some off the table. So like, let's say, where's a 1 to 4 here? 1 to 4 is, yeah, right about here, right about this wick. So let's say you take 25% off at this level right here to be able to keep your stop loss. Okay. Okay, so tapped in, we took 25% off, keep the stop loss open. Pro trend, we're able to do that, right? Come back down. Okay, sweep. Above. Anybody see another opportunity possibly here? If you don't, let's go check out this. 15-second. Where was supply and control? It was in control from right here, right? We've swept, we've broken. So if that's the case, where can we put our trade? So for anybody who's asking, are the seconds worth it? Well, if you know how to use them, 100% they are. What's the most reliable order block? It's one that takes liquidity, right? So if we do something like this, 1.1, 1.2 is kind of like our lowest. You know, I don't want to hear anybody say that there's no opportunities in the market. What do we got? We got reason, we got cause, right? Got liquidity built, we got equal highs now. Tapped in. Break even at this point. Just move out to the 1 minute. Equal highs. All right. That's the end of the session. I mean, this actually, if I'm looking at this, this is at 11:30, so we shouldn't have even taken that. That's kind of like a little bonus trade. But let's just tally up. Not to show off, not to flaunt, just to put in perspective as to how much is available each day. There's your pro trend stuff, you know, here's your counter trend. So you got what, 12? I don't know what this one is, 12, 14. So 12 and 14, 26, 26, 36, 37, 38. 38 and 16, and 7 and 12. It's a lot. You know, that's all that, like, you're never going to catch all these, okay? Like, and you know, unless you have a 1 to 500 leverage, you'll never be able to be in all these. You'll get margin called, right? But the bottom line here is these are all trades available within the trading plan. But you just, and that's all I'm trying to show you, is that like all of these things are directly in there. It's just a matter of interpreting it the right way. One of the foundational things that everybody needs to realize is we need to have reason for price to go in the direction that we're trading. Okay, reason being ideally would be sweep of liquidity, built liquidity to be able to put us in a position where there's very minimum exposure to going into drawdown. That's the whole idea. That's what smart money is. Smart money can be anything it needs to be, but ultimately what it boils down to is smart money never exposes itself to dangerous situations. We want to trade into pullbacks. We want to see minor details of sweeps and then be able to jump into trades, right? And this is it, man. This is there's no secret sauce. It says a rate net trading plan. And again, that's just a template. There's stuff that I do that's not in there. There's things in that trading plan that I don't necessarily use every single time, but it's a guideline to be able to get you thinking, right? And get you in a position to start looking at the market and really putting in perspective what the storyline is, right? So, I know I talk in circles a lot about this, about building the narrative, building the story, building this, building that. It shouldn't be taken lightly, because this is arguably the most important thing. What is the market telling us? So if we were to go out to the 15-minute, go back to the beginning of the session, replay tool, replay tool right at the beginning of the session, right here, 7 o'clock. Oops. Okay, let's get rid of all of these drawings right here. Okay, let's get rid of all this. And again, let's put in our supply zone. Again, just kind of going over this once really quick for the last 10 minutes. What's the expectation for the market right now? What is it? Is it more likely for us to put in a new high while in a supply zone, or a new low into a demand? Okay, so when you have that basic knowledge of just understanding, we're counter trend within counter trend, right? But it's just a matter of saying, okay, well, the more likely, we deal in probabilities, the more likely probability or outcome right now is to put in a new higher low. After we put in the higher low, again, now you got to select your POIs. How do you select POIs? Well, it's really simple. These got equal lows. This got equal lows, we swept. So what's more reliable? No brainer, right? So if you have a hard time selecting POIs, or you have a hard time understanding the narrative, just remember to zoom out, understand what's going on, right? So this one right here also took liquidity, but then put itself exposed to the equal lows. So that's why this one is no good. If we break through this one won't hold, right? So you just have to remember these things and piece them together. And that's why it's so important to have your notes only really done on the 15-minute, understanding the higher time frame. If you got to go like this and put yourself a note and say, expect higher low, then higher high into extreme for our supply, and you have to keep this on your thing, on your chart for the entire session, do it. That's what it's for. All these tools are here for you. How every single person uses them is going to be a little bit different, but ultimately you got to be able to use these tools and ultimately piece together that narrative. It's just the foundation of everything that we do, is piecing together a proper narrative. As soon as you start wishing things to happen in the market, it's probably because you're over leveraged, you're moving around stop losses. You're hoping that this one trade is just going to pay off so that you can get funded. That's not the attitude to have. Just all you have to do is just do something like this and say, okay, well, here's the lowest point. This was the high that put us into the low. We broke that. So where's the strong area? It's going to be in the bottom half of this leg, right? Somewhere in here. Okay. Once we see that, so once we push away and we fail to take out the high, what does that mean about the low? It's exposed to equal lows, we get swept. What do? We look for the change in character. We then want to take out the high, right? So sometimes it takes longer than anticipated, but the narrative does not change. This low broke this high, creating that chalk. We should come back down to mitigate something within the lower 50% of this region, okay? Once that happens, then we start looking for these pro trend moves. We want to see a take on liquidity. Boom, here's your area, take this. Put ourselves into the new supply zone. If the supply zone fails to take out the sweep, what does that mean about the high? It's going to be weak. We're going to induce this entire POI and come to the extreme that we were meant to go to. Okay, it's tough. It's not easy, but if you don't have your narrative, if you're confused about your narrative at any time in the beginning stages of the session, sit there and think about your narrative until it makes sense for you before even considering going on any lower time frame. If you don't know what's going on your highest time frame, you sure as hell are not going to know what the hell is going on the lower time frames. And give yourself reaction points. Say, okay, well, this is the low that broke the high. So put a reaction point on this. So when you're on the 1 minute, you can say, okay, well, here's that point. So when I go on the 1 minute, I go like this and I say, okay, well, this is that lowest point. This is where I'm expecting. So if you see this nice little sweep, you can say, okay, well, this is where I want to trade into and away from. And then we can start building that story based off of how liquidity gets built on the 1 minute to be able to see if it makes sense to go up here or if it's just going to keep going lower. Any questions? It was a quick hour and a half today. Yeah. Oh yeah, we've been on for an hour and a half. Holy shit. Okay, Zen, go ahead, man.
So I would like to just reaffirm something we went through before. Because I had a problem was I was taking a lot of counter trend trades, right? So in this case, you told me I should pair 15-minute chop with 1 minute chop, so I would be in pro trend, right? So
right.
In this case, we're taking buy trades. It's the same thing, right? Because 15-minute has already chopped.
That's right.
Going up trend.
Yeah.
And so that's why we're looking for a 1 minute chop.
Exactly, because in terms of our structure mapping is done on the 15, right? So because we've chalked here, right? Essentially, this low is going to be short. So now every time that we come into a POI within the premium, the discount of the leg, then we can start to look for these 1 minute chalks, right? Because technically, yes, this is the prevailing trend on the higher time frame. But right now we're making a series of lower highs and higher lows and higher highs, right?
Yeah.
So then we can look for these. And then now what ends up happening is once we come up into here, ideally we want to see swing points. And now we're technically going along with pro trend stuff in terms of the higher time frame because we're in the so this is pro trend. How would I explain this so that it's not confusing? This is pro trend in terms of we're making a series of lows, highs, lows, highs, lows, highs, lows, highs. So when we're in this kind of corrective market structure, it's easy to take flips on the 1 minute. However, when we come up to here, ideally what you want to see is that 15-minute and then come back and then see something like this. Very similar to what we saw right here.
Yeah.
Does that make sense?
Yeah.
Okay, thanks, man. Intraday. Anybody else? Questions? Oops. Going once. Going twice. 3 times. Okay, cool. Intraday, that was a good one. Cool. Well, hopefully you guys are enjoying this. I know we're in week 3. It probably seems like time's kind of flying by. I guess I have a pretty serious question for everybody. Are things starting to piece together a little bit more than when you first signed up? And you can be honest. If they're not, I would like to address it too. And you can reach out to me individually as well. But do you find you're able to put together a storyline a little bit better now? Okay, cool. If you're not, and you don't want to answer it, that's totally cool. It's understandable. Shoot me a message. This is what this is for. I can't reach out and hold every single person's hand. I need you to meet me halfway with it. If you don't message me and then all of a sudden we're in week 6, I've got 2 guys right now. And again, not to shit talk or anything, but I'm telling you this so that you don't do it. But 2 guys right now chasing me around from the previous masterclass didn't ask a single question the entire time we were together for 6 weeks, 7 weeks with the live trading sessions. And now all of a sudden they want all the help in the world. And it's like, well, now I'm dealing with you guys. So I just don't want anybody to be in a position where they feel like, oh shit, all of a sudden it's week 6 and things aren't clicking together and I haven't asked any freaking questions yet. So again, I can only meet you where you meet me. So just, don't be scared to how many of you guys, I'm sure at least half of you guys have jumped on calls with me, 15 minutes, 20 minutes, an hour, some of you. I got no issues doing it when I have time to do it, okay? I'm more than generous and to do stuff like this, but you got to reach out to me, okay? So that's all it really boils down to. So listen, have a good weekend. You guys will be able to jump on any of the calls this weekend as well. That was kind of one of the deals I made. I was expecting to be away from the computer tomorrow, but I'm going to have some cell phone service. So I'm going to try to set up a like a hub of some sort to be able to cast my internet and be able to do this thing at the cottage. So yeah, come jump in tomorrow if you guys are available. Sunday will be the same thing. 10:30 a.m. Eastern Standard Time is the start time for all of these. So I will be sending out Zoom links to the entire group chat, and you guys can jump in at your leisure if you decide to. And if not, of course, you'll have the recordings and any questions further than that, you know how to reach me. So have a good weekend, and yeah, we'll catch you guys hopefully tomorrow. Have a good one.